Hello, this is Brian Lysing with Financial Brokerage, coming to you from our life insurance department. And today I'd like to talk a little bit about the combination products that combine life insurance and some sort of long-term care benefit together. Now, for those of you who are already familiar with these products, what you've probably quoted and sold to your clients most often has been a GUL, a Guaranteed Universal Life Insurance policy, with a rider attached to it. It could be the chronic illness variety or the long-term care variety. And usually the reason clients look at these sort of products, it's price driven, right? They're looking for a product where they can pay a premium annually or monthly. They don't have to come up with a big lump sum for one of the true hybrid type products out there, or maybe they don't have the money available. So these sales are driven for economic reasons. Well, I want to present a little idea that can maybe shift your thinking on these a little bit. You see, some of the hybrid products that combine life and LTC together on a short pay or a single pay basis can actually cost your clients less money over the course of their lifetime. Now, let me give you an example that really helps make this make sense. So I ran the numbers on a male age 60, happened to be a preferred non-smoker, and this gentleman was looking for $500,000 of life insurance that could be used for long-term care. So we really wanted $500,000 available for long-term care purposes. We ran the numbers on a GUL that this gentleman would pay for the rest of his life. It came out to be just over $9,700 per year. It's guaranteed to never change. He's got a pool of $500,000 he can use, in this case, for a chronic illness. Now, I looked at one of the better hybrid products out there, and with these, our death benefit and LTC benefit do not have to be the same amount. We can dial down the death benefit and still have the same LTC benefit. So I did that and came up with the death benefit of about $200,000, but our LTC amount was still $500,000. For this client, that was the primary concern, to have $500,000 available for LTC. Now, these true hybrid products, we couldn't run it where the client paid for life. We had to do some sort of a short pay scenario. So I ran a 10-pay scenario for this client, and our premium was just over $14,000 per year, closer to $15,000, but the client was done in 10 years. So what does that mean? Well, in 10 years they paid in $148,000 and they're done. Meanwhile, the other client has paid in $97,000 in the same 10 years, but they have to continue paying. At some point in time, there's going to be a break-even point where the client with the GUL will have paid in more than the client with the true hybrid. In this case, that happened in year 17 when our client was 77 years old. Now ask yourself, when is this client most likely to use LTC benefits? Prior to or after age 77? This client thought that for him, based on family history, it would more than likely be well after age 77. So in that case, the true hybrid product was the better value. So if you're looking at a GUL with chronic illness or LTC added to it, let's take a look at these true hybrids, even on a short pay basis. I think for a lot of your clients, this is going to provide the better value for their situation.